Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. A casino stock and a tobacco company make up this week's Growth and Income Stock Picks that Todd Bunton, our Growth and Income Stock Strategist, wants you to know more about. He calls them the sin stocks that he's written about recently. One, the casino stock is Ameristar Casinos, ASCA, the ticker symbol. Where are these located?
They're kind of located all across America. They're not just in Nevada. They have locations, a few of them in the Midwest. So Missouri has a couple. There's one in Iowa, one in Indiana, the Chicago area, Mississippi. So more of the regional gaming players. They are a small cap stock here, and the company's actually taken quite a pullback along with the overall market in the last few months. Reason for that is people expect, if a recession hits, people stop gambling so much, and these companies are fairly highly leveraged, meaning they have a lot of fixed expenses. So even a modest decline in revenue can be a big decline in earnings per share. But if we don't get a recession, then this one could really take off like a rocket. The company's actually been delivering solid results. They've reported 3 consecutive positive earnings surprises, solid sale, or at least modest revenue growth, and that's led to double-digit earnings per share growth. Analysts have been raising their estimates over the last few months, and they expect solid growth to continue over the next few years. Based on consensus estimates, they're looking at 167% earnings per share growth this year. Now, a lot of that has to do with the huge amount they did a huge stock buyback earlier in the year. But they expect that growth to still continue into next year as well, based on consensus estimates, looking at 21% earnings per share growth. So a good growth story here as long as there's no recession on the horizon. And you got some income as well. They pay a dividend that yields 2.3%. They actually have held that steady since early 2008. So they didn't cut it during the Great Recession, but they haven't raised it either. But if these growth rates manifest, then I can expect that dividend to increase as well. And you're getting it at a really great price right here, again, as long as there's no recession. But they trade at just 8 times forward earnings. And with those growth rates, you're looking at a PEG ratio right around 0.5. So there's tremendous upside here if you think that maybe the economy's just kind of sputtering along, but it's not going to be a pullback, and as long as people go out and keep gambling, then this company will do fine.
Okay. Lorillard, Inc. is the tobacco stock, LO the ticker symbol, and kind of hard to fathom that a tobacco stock is doing good this day and age when everybody seems to be against tobacco.
Yeah, they definitely face some regulatory headwinds. That's no secret, but tobacco has traditionally been a very recession-resistant industry, so if people are maybe a little squeamish about a recession, this would be the type of stock that they'd want to go into. It is the 3rd largest tobacco company in America. They have five brands, but their flagship is Newport, which is the leading menthol cigarette in America. Company's delivered solid results, decent sales growth, solid earnings per share growth because they're buying back a ton of stock as well. They've delivered 7 consecutive positive earnings surprises. And when we take a look at the pricing consensus chart, you can see consensus estimates have been trending higher over the last several months. And what I want our viewers to focus on is the 2008, early 2009 era. That's when obviously the Great Recession, we were in the midst of that, and you can see their consensus estimates were fairly steady because, like I said, people still go out and smoke during a recession. It's one of the last areas that they'll cut back on.
Probably more so during stressful times.
Yeah, I imagine, right? A sin stock like this, they say when the recession hits, that's right, these sin stocks tend to do well. Casinos are the exception, though. But it's a solid growth story here. Based on consensus estimates, analysts are looking for 14% earnings per share growth this year, 11% growth next year. So good growth, and you're getting really good income. They pay a dividend that yields 4.4%. They've raised that every year since they were actually spun off from Lowe's Corporation in 2008. So that's moving in the right direction, and valuation's reasonable. They trade at 14 times forward earnings. That's in line with the industry average. So a good solid defensive sin stock here. Ameristar may be a more high growth. If you want to gamble on the casinos, then that's the way to go.
All right. Do you own any or either?
I do not.
All right. You can get more details on these 2 stocks on Todd's Growth and Income stock page on Zacks.com. You can also see other general stock picks in the Growth and Income category and other categories that we write about on the website by going to, again, our homepage, Zacks.com. With Todd, I'm Terry Ruffalo.